There is too much debt in the world, so they must inflate it away, which they will. That's the only way, the only thing you need to know. This is by Eric Peters, CIO of One River Asset Management on Zero Hedge. Investors are beginning to come to terms with the fact that many things they believe to be true are myths, said Sasquatch, his already enormous market footprint having deepened markedly post pandemic. They assumed the 60/40 portfolio was robust, and sometimes it is, but other times it's not, he said, winding our way through the streets of London, crooked, cracked cobblestones in his footsteps. They assumed inflation would remain low forever, expectations too. That tips hedge inflation, tech outperforms. It turns out these things are not always true. Real estate, it turns out, is not always a hedge for inflation, nor is gold. And before this cycle is over, investors will discover things they believe to be true about infrastructure, private equity, and a variety of illiquid investments are also just assumptions. Continued Sasquatch, CEO of one of the world's largest investment firms, his returns surging. The portfolio adjustments required are dramatic. The clients need help solving such problems, so it's unsurprising that our solution business like yours is seeing strong inflows. Well, it's obvious it isn't, he asked, answering rhetorically dismissive of my question, almost irritated, which made me laugh. We'd spent a couple of hours together and had finally gotten onto markets. Well, it isn't, he repeated, louder. I'd asked what he thinks is the most important thing to focus on. He's one of the greatest CIOs of our generation and keeps his macro trades liquid, his risk management tight. There's too much debt in the world, so they must inflate it away, which they can do. And they will, and that's the only thing you need to know, he said. Well, we have gotten the inflation we last discussed, said the Viking, leading tactical asset allocation for one of the mighty Scandinavian pools of assets. I had last visited pre-pandemic, when we had agreed that whenever the next recession arrived, it would spark an aggressive fiscal stimulus and catapult us into a new inflammatory regime. He continued, but the firms that believed their commercial real estate investments would insulate them from this have not done too well with that, I think. The Swedish, turned out to be a Swedish understatement. If you look at listed commercial real estate companies here on our stock exchange, which is overall down 35%, you'll find that these names are down 60 to 80%, said the same Viking. Still, you must also consider that inflation has risen by 10%, which is a real loss, and the Swedish krona is down 20% against the dollar too. Stockholm itself was magnificent as ever, cold but clear, leaves turning but invisible, its highly leveraged financial architecture sagging, groaning like everywhere, and we have not yet seen the private markets marked lower really. We are 200% funded, said the chief risk officer for one of the largest private pension plans. What does that mean? I asked. We have twice as many assets as liabilities, he said patiently. Apologize. I am just used to U.S. pensions, which in some cases are just 40% funded. Have not ever heard of 200%. How are you so well funded? I asked. Good investing, I think. Perhaps some good luck too, he said, smiling. And so you're well positioned for the coming distressed selling by your poorly funded and leveraged peers, I asked, and he smiled. How do we invest for this new environment? Asked the CIO in Stockholm. I don't yet know what you currently own, so that's hard to answer, I said. But in general, I think we should all re-underwrite what has worked for the past couple of decades of low inflation, low interest rates, financialization, mean reversion, leverage, globalization, and peace. You notice here he says peace. Ask how much strategies will perform as these dynamics reverse. Ask how your strategies will fare in a long period of financial repression where central banks inflate away government debt. Re-underwriting is hard because we are all anchored to what has been, and the future will look very different, I continued. To capitalize on new opportunities and insulate yourself from risks, you'll need to be quite open-minded and my in all commitment to digital assets reflects this embrace of a change. And systematic trend following strategies are a highly effective way to capitalize on quantum change in traditional markets. That change has only just started. We combine trend following with volatility trading. These were unloved strategies for the past decades. I think strategies that struggle then will now work well for years, and vice versa, he said. And this is on here at Zero Hedge by Eric Peters, CIO of One River Asset Management. Please leave your comments. Thank you for your support. Kindly support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box below.